following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Right, and that music means it's time yet again for the Option Block, your bi-weekly source of options, wit, and wisdom, punctuated by moments of extreme silliness. My name is Mark Longo from the OptionsInsider.com, and joining me on the all-star panel today, we have quite the gaggle of folks, starting off with the regular now, the man holding down the OX hot seat, none other than Big Tim Navabi himself. Tim, welcome back to the show, sir.
Hi, Mark. How are you?
I am excellent. How are you?
I'm doing pretty good. I'm on storm watch right now. Snowmageddon.
I don't know if it qualifies as Snowmageddon, but yes, the listeners who are not in the Chicago area, we are faced with perhaps one of the first real snowstorms of the season, or hopefully one of the last. Hasn't been exactly a winter that we can complain about here in Chicago, so that's nice for us. I know for us personally, we were looking to do a little event here. We've been planning it for a few months, and we were toying with the idea of doing it tonight. Thankfully, we did not. That would have been an issue for us, having 6 inches to a foot of snow dumped on us. It kind of tends to lessen the turnout for those types of things, which is why we booked the shuttles, just in case. All right, and the man who will not be coming to our event because he is lost in the hinterlands of Maine enjoying delicious lobsters is none other than Andrew Giovinazzi of Option Pit fame. Andrew, welcome back to the show, sir.
Thank you. It feels like it's been a week. Or a week and a day.
Funny how that works, huh? Yeah, it's been so long. I don't even know how to do this anymore. What is the show we're doing? Who am I talking to here again?
Who are these people? What are we doing? What are we doing it about? Options, futures,
something like
CDSs, whatever we're doing.
I think
we're here to find the missing MF Global money. That's what we're here to find. And everybody look under your shoes, reach into the couch. Where did the $1.5 billion go? Gee, I don't know. The $1.5 billion is just gone.
We're gonna find it all in under an hour. That's how good we are here. And it's like the old Scooby Gang on the Scooby-Doo show. They solve all their mysteries in under an hour. We will find
exactly. We'll solve it in 5 minutes for the regulators. The money is in all the guys that are short the bonds pockets. That's where it is.
We'll go dig up Corzine's backyard and we'll find the missing pieces there. And last but certainly not least, we have a man who I'm sure is quite excited for Snowmageddon because he can bring out the old snowmobiles. None other than Uncle Mike Tusaw from Know Your Options, Inc. Uncle Mike, welcome back to the show, sir.
Oh, happy to be here. And I'm actually someone who can complain about this winter. I think it's been terrible.
Yes, I suppose from your snow aficionado perspective, it's been a bit of a letdown.
Yes, to say the least.
You just get the little guy big enough where he can take out the mini snowmobile, and winter negates you on that front.
Yeah, he was doing good. He was zipping through trees. He was scaring he was scaring me half to death the way he was riding, but kid can ride.
I would expect nothing less from your son, Uncle Mike.
Ah, that's my boy.
All right. And with the team assembled, we're going to dive right into the trading block.
The trading block.
And welcome to the trading block. This is, of course, the portion of the show where we dive into what was trading, what's been moving the street. And it was a day for the bulls today up on the street. Most of the major indices up about 0.5% or so, with the NASDAQ leading the charge, up 0.8% to 29.56, almost 29.57 on the day. Of course, the flip side of that is the old VIX cash taking a beating yet again, down 7.5% to close today at 16.77. Actually, just ticked down while I was talking, another 0.02 of a point. So let's start there, as we often do here in the old trading block. Andrew, we've been talking for quite a while on this show about the VIX limbo poll, the VIX cash limbo poll, and how low can it go? How many notches can we bring this thing down? And every time we say, oh, it can come down another notch or so, it always seems kind of crazy because this thing has just come off so aggressively over the past few months, and now it looks like you're really fighting to pick up those last couple of points. And then, we were talking on the last show that looked like VIX might have a little bit more to go on the downside, and sure enough, bam, Greece comes out with their deal, and the VIX is just off to the races to the downside again. So interesting times from a volatility perspective. I know you've been pretty heavily short out there, so I'm sure you're pretty happy. I'm sure this is a bit of a surprise to you how aggressively it has sold off. I mean, it's not like the Greece thing was.
Today was a little. I mean, we've been reporting like we wanted positions with some downside gamma, and I actually closed some of that off today. But they're like we look at the VXX a lot, especially for the downside play when the futures are set up like this. And I mean, that thing in the last 5 trading sessions or so is down from 29 to 24. $5 on a $29 number is pretty big. So, and actually there's a little more room in those futures to squeeze out a little more crushing on the VXX. But this is the level that it keeps bouncing off of. So if we break through, I think we move a little lower, and those futures can start to get a little closer to the actual cash, which it's been a little sticky so far.
Yeah, because I'm looking at a chart of this. We're really around. We're almost right at these lows right now in the VIX cash anyway.
Right, and the whole thing too is I'm looking at so that we're sitting here. We have not been able to break through this, but if you look where the CBOE closed the future, where they closed the futures today, April future is still trading $5 above the VIX cash. So the VIX options are trading on that April future. They're trading on March now, but they're going to be rolling to April, and there's about almost $3 in those. So there's a lot of premium still in the futures that have not come out in the options yet. And that's the squeeze we're looking for, where I'm waiting for those things to compress down, which will generate a lot more gamma or a lot more acceleration on the downside in like the VXX products and the VIX options. So that's what we're looking for here. And if we break this cash level, I think we'll start seeing people actually go out and letting the futures go down a little bit more.
Yeah, they're kind of holding those futures in reserve, artificially high.
Exactly.
A wee bit.
There's still $3 in March, and there's about $5, a little less than $5. Well, actually, it's still over if it's almost $6 in the April future, premium wise versus cash. So it's still something come out. Although what we got lately is $2 out of March over the last 2 days. Literally just that, and that's where we got the big collapse in VXX today.
You know, a lot of savvy VIX players, we saw a lot of this going into last year as people were perpetually rolling their short VIX positions and put spreads and whatnot on the downside in VIX, predicting that inevitable sell-off that came in towards the end of the year. A lot of people were also hedging their bets a bit to the upside with some upside calls, some upside verticals, just in case VIX did that turnaround that it can so often do. And it looks like this is the time where some people are starting to do that again. But it sounds like you're saying to hold off on picking up that upside until the last few ounces of juice have been squeezed out, and then you can really get a good deal on some VIX upside hedges at this point.
Yeah, basically it's more like, you trade it. It's actually not too far from Mike's strategy with Apple. You have your position. It kind of goes your way. You hedge it to a certain degree, and if it keeps running, you make some money. It's just more like on the downside with these, because that's sort of the downside gravity. Once that reverses, that's fine. But right now, at least the way it looks to me as it sets up, there's still some downside pressure on that stuff. So when it goes away, then that whole position, it goes away. But I haven't seen any real reason to go jump in there and buy VIX calls yet, although this little thing with oil might be the only thing that gives me pause.
All right, thank you, Andrew. And, of course, some of the other activity we've been watching over the past, actually it's been a week since our last show, so we have a lot to catch up on. And one of the big stories of the past few sessions has, of course, been oil and its bizarre little move over the past few sessions, particularly. I know, Mr. T-Nov, you are a big fan of oil. I know you were loading up on that 200 strike back on the day of rage. You're a big-time oil upside guy. So what do you make? A, what do you make of what's been going on in oil of late? And B, what kind of input are you receiving from the OX customers? How are they setting up for these oil moves?
Good question. Today was, a little bit of a shocker. Oil at 108.22 is where I have it now. Looks like it got as high as 108.24, as low as 105.45. There was an API report today, which was rather neutral, slightly bearish. And what did oil do? It just went straight up. So, it does have a lot of people scratching their heads. We'll try to find out here, where this is coming from, whether it's
those damn speculators moving the market illegally again.
Right. Whether it's short covering, whether it's I thought I read a headline here that said something like, hold on, I apologize for the delay here. There's a headline on Bloomberg as far as the Brent is concerned. Brent rises to 9-month high as German business confidence beats forecast. I don't know. Maybe it's the replacement of, maybe it's swapped places with copper. It kind of looks like copper is sort of disconnected from the equity markets, and maybe now it's, things look good, economy-wise. People are going to be getting in their cars and moving. So,
when I think of major drivers for Brent, I think of, first and foremost, German economic confidence and consumer confidence. When the Wiener Schnitzel is strong, Brent is going north, baby. Yeah.
Right.
That's one of those headlines. Sounds like where they're trying to reach for a connection where there may or may not be one. That's like the Wire guy was assigned to explain why oil went up today. Here you go.
Maybe they're all driving down to Greece, and they're going to pick up their friends and bring them back to Germany.
They're carrying the money down.
Shake hands and
they're
have
carrying
a big party.
Truckloads of money down. It's going to burn up a lot of fuel.
Yeah.
I like that. So were a lot of people calling up to play oil at OX today?
They were. To the surprise, really. We have a couple customers who are in Texas and really know the market well, and they were kind of, their jaw was just kind of open, like what just happened, because they were playing the report to the downside, and it just kind of went straight up. So, a few of them were stopped out. So.
One of those where you're looking for the earnings or similar events, and you're prepared for the downside. The number comes out, it's kind of what you expected, and then it just takes off in the other direction. Gotta love those moments. Speaking of just big downside movements and perhaps surprising upside, Sears posted their earnings today, and it was, as I think a lot of people expected, pretty bad, perhaps worse than a lot of people expected, and yet the stock was up about 20% on the
Straight
news.
Up.
So this kind of falls into that same category of bad news, stock off to the races. primarily because it's just they're just going to divest of most of their assets here. It really seems like, I know I have some people in my family actually who've worked for Sears over the past few years, so I had an interesting airful of what's been going on over there and the numerous issues that are going on in that management. But it really seems.
So does that mean they're just going to sell all their property? I mean, basically, I think that whole thing for that guy was just a big property play.
It was a real estate play. It probably was one of the worst time real estate plays in the history of modern finance, where the guy comes in and scoops up tons of real estate in, I think, 05, 06, right at the cusp, right at the tip of the market, and then it immediately looks south. All of that real estate is worth a fraction of what he paid for it now. So they've incurred so many operating losses running these things that I can't imagine they're going to be able to recoup any of that with any substantial amount of that with the real estate. I mean, how much is that even worth at this point, that commercial real estate?
Yeah, is he going to turn the whole thing into a REIT? I mean, it's, again, I think, short covering mess for SHLD.
Yeah.
I had an interesting observation on that. I have he wasn't under my management, but this was a self-directed client that was just had just put on a short-term naked call on SHLD. He shorted the 80 calls, and so he shorted them originally at around the 57 level, and so 57, and so market went down a little bit, and so yesterday was looking pretty good at it. And then the market shot up today, and so it was ahead of where he got into them at. He was still able to get out for a pretty significant profit today, even after SHLD shooting up that much, just because of the vol drop in it, which I think is just kind of an interesting lesson in that just because of the fact that the underlying goes against you or goes your way, either way, there's still other pricing factors that are involved in an option. This was an example where Vega outlasted Delta to save this for the client.
Yeah, that's still the old number one question we're getting over here at the old Options Insider 5+ years later. Bought an upside call going into earnings or whatever the case may be. Stock rallied, I lost money. How could that possibly be? This is a pretty extreme example of that. The stock rallied 20% and still that earnings juice was enough to overcome the delta and to and make it possible for your guy to correct his inappropriate, or perhaps not inappropriate, but wrong in direction trade and take it off for still a winner or a scratch. That's impressive. But yeah, we still get that.
This is one to where he talked with me about it first, and I'm like, well, all right, well, if you're going to do this, draw a line in the sand. And if memory serves, I believe like 67 was the line in the sand that we were going to look at, to where at that point we would either make an adjust. I would either tell him, look, make an adjustment, get out, or something along those lines. He wasn't planning on just holding it and think, well, if it goes to 8, as long as it stays below 80, I'm okay. And that's 79.99. He's lost half of his money, and then all of a sudden the next day it's at 92. He didn't trade at that style. 67 was his line in the sand, and so he actually, if you're going to trade a naked call, he did about as good as you can. I mean, I'm not as you guys well know, I'm not much of a naked call guy, but this was just a situation where it went up so much today, and I'm just telling him, like, okay, if this thing continues to go up, you're going to disobey one of the cardinal rules of trading, and that is never let a winner turn into a loser.
That is a stinky one.
Yeah.
Breaking that rule.
So yeah, interesting stuff going on with SHLD. They were, of course, lighting up the tape today. As a result, they lately have been doing 23,000, which at the ADV, which is elevated, I'm assuming, for them going into earnings. They probably do a lot less than that average in an actual day, and they did over 120,000 contracts today. So a lot of people diving into SHLD. I love that name, SHLD. Harkens back to the old comic book days of my youth, and you think of some great global police force or something along those lines. But yes, a lot of interesting people. A lot of people actually coming out net buying deltas in SHLD. Not exactly a surprise, given the fact the stock was off to the races today, net about 270,000 deltas to the north here in SHLD on just a flurry of activity. I'm looking at the chart now, and it's literally every strike, couple thousand, couple hundred, couple thousand, which is very unusual for this name. This is not exactly an active name. Most of these strikes have maybe a few thousand open interest on them as a whole. So this is a lot of people are playing just strikes across the board in this one, which is kind of interesting to see. There was no preponderance. Everyone wasn't just loading up on upside calls or some of the other trades you expect to see on such a big moving day like this. And before we close out the old trading block, anything else lighting up your old personal tape, Uncle Mike? Were you busy rolling calls in SLV yet again, sir?
Haven't had to roll up any calls yet, but might have to pretty soon. We're short at the 35 level in SLV, so I'm ready to, by gosh. And it's kind of one of those things where it's like Apple. If you got it, if it continues to go up higher and I have to roll more calls, it's a very joyous labor of love.
Yeah, I don't have a new segment on the show. It's going to be called Uncle Mike's First World Problems. It'll be, today I had to roll all of my upside yet again, and then I lit my cigars with a 20, and the 20 wouldn't light. So many problems.
Now, the real truth of it for everyone listening out there, you get those days to the other side, too, and the key is to get more to the good than the bad.
Well, that is
it's
what
not always to the upside that you make these rolls.
That is why they're paying you the big bucks, sir. All right, and with that, we're going to close out the old trading block today and roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is the portion of the show where we break down some of that interesting and or unusual options activity that we're seeing here on the old tape today. And we're going to kick things off today with a very interesting and or an unusual one. Today we saw some activity in a newcomer to the Odd Block, TRW Automotive Holdings Corp. And I like these guys because their ticker symbol is TRW. It's not something absurd. When you have an acronym in your name, that should be your ticker symbol. I think there should be a law about that. It just drives me crazy. You see someone like QEZ Technologies and the ticker symbol is AXK, something absurd. All right, and TRW today, what we saw was some very interesting activity lighting up the tape in this one. This is a name that does about 500 contracts a day. So this is about as thin of a name as you can get. They did over 20,000 today, so a very, very sizable activity day for TRW. And the bulk of this, 20,000 of these 20,500 contracts came in one very bizarre three-legged spread. And depending on which way you fall on this one, was either a size bullish risk reversal with a very interesting short upside call kicker, or perhaps a size 1x2 call stupid with a downside put kicker, or perhaps a vertical 1x2 call spread with a downside put one. A lot of different ways you can play this. What we saw on this one was it started off with 5,000 of the April 40 puts going up on splits for about 77.5 cents right in mid-market. And in case you're unaware of what that is, splits is when they're putting up a spread and they're trying to get prices that are unachievable for some reason with the whole number prices that are listed on the book. Then they create these ratios of partial, in this case, half at 77 cents, half at 78 cents, so they can get that 77.5 net price to work out for them on those puts. A very common occurrence when you're doing large institutional block trades. Don't see it too much on the retail end. I know, Tim, you put up a lot of split trades over at OX these days?
No.
That's kind of what I thought.
Not at all. I appreciate the little educational.
Tim, the one-word answer,
there.
man. I love it. No. That is a no, sir. All right. And we saw those puts going up on splits, and because it's mid-market, it's one of these ones where you kind of have to guesstimate what the heck they were up to. The IV, usually you can look at the implied vol on a strike, and that will be your final determinant as to what actually went on in this name. But the weird thing about this one is that because the stock rallied a bit today and because of some other events going on, the vol came off across the board on all these strikes. What we saw was a net downturn on vol on all these strikes, even though some of these were clearly perhaps buys. So it's interesting trades. This looks like these split puts went up as a sale mid-market here. And then 5,000 of the April 45 calls went up at $2.90. Now, this is where it starts getting weird, because you would think that someone would be selling the puts to finance a purchase of the calls, and so would be legging into some sort of bullish risk reversal on that sense. And then, but these calls also went up at a mid-market price of $2.90, also having the implied vol coming off on this strike as well, which may indicate indeed that they were sold, which makes this trade even more bizarre. And then the final kicker on this one was then 10,000 of the April 50 calls come up. These were definitely sold. These were clearly sold on the bid for 85 cents. So what we have is a very weird three-legged spread where it's possible this guy sold the April 45 strangle 5,000 times and then topped it off with some extra upside 10,000 times on the April 50s. It could be this guy did exactly what it seemed like earlier, which is sold those April 40 puts, bought the April 45 calls, and then sold on a ratio the April 50. So essentially he legged into a ratio vertical call spread and then financed it with some downside puts. That seems to make the most sense on this trade, but again, with those April 45s going up mid-market and with the vol coming off on that strike net, it's impossible to really determine. It looks like they could have very well been sold. So any of you guys want to weigh in on what the heck this guy was actually up to in this name? It's a fun one to parse, I think, for our listeners.
Like what I'm looking at, I didn't know you could even do a ratio stupids. Now I might have to go see some other things that I can do on this. You can actually short a ratio stupid. Wow!
You've got to change slide 6 of your Trading with Stupids webinar now to include the ratio.
There we go.
Yeah, you know what it looks like? I think the guy is he's long the stock a boatload, and he bought puts and he sold lots and lots of calls. Because what amazes me is how almost everything he traded is marked against him.
Yeah, this was not exactly a winner for him today.
Well, no.
From an options perspective.
He sold the calls, they're in his face, which is hard to believe when you sell 10,000 of those out-of-the-money calls like that. You know, the stock actually did get a pretty good move off the bottom today, though. There was a dip down there, it looks like 43 and change. So it almost sounds like there was kind of a big chunk of stock, and he sold all this stuff against. That's, he bought puts and then just sold. So that's what it kind of feels like.
Yeah, the odd thing about this one is that usually if you look at the open interest graphs and all these strikes, these trades are just off the charts. They're enormous. You'd expect a commensurate move in vol on these strikes, too, to reflect these are all size trades for this name. I mean, most of these strikes have 1,000 or less contracts open interest. This is a big trade for this name, and yet the vol was a pretty gradual move to the downside on all these strikes. So a very interesting setup where the two almost seem incongruous. But I agree, it probably is an underlying holder. I don't think this guy's coming out naked putting this on. And if I had to guess, it seemed like this guy might be legging into the ratio call spread and then selling the puts. But like I said, your guess is equally viable. There's a lot of ways this guy could be doing this. I mean, if he was long the underlying, then of course he would probably maybe be selling the ratio stupid. I can't even say that.
What's amazing
say that with a straight face.
The stock was trading down 29.29 in December. Stock's almost up $20. It's up, $18 or $16 or $17. So it's a pretty big power move off the bottom for TRW Automotive Holdings. You know what I mean? So I don't know. Maybe they're just finally trying to take some money off the table with this.
Yeah, interesting one. I think it's a fun one to parse. It's one of the reasons why we do the odd block here is just because these strange ones pop up every now and then. There really is no rhyme or reason what this guy is doing. He could very well be naked specking to the upside, picking up that vertical spread and financing it with some downside puts, and then he's just hoping for this upside ride in TRW to continue up to the 50 handle or so. So it could be a lot of things going on with this guy. Like I said, it's interesting one to parse. I'll be curious to see what our listeners come up with on what this guy was actually up to, because the vol and the open interest are not exactly telling the same story. And to make it more fun, they did most of it pretty much mid-market. So there's no clear story here on this one. I didn't have a chance to parse the underlying. Maybe there was a big block of underlying that went up with this too. Maybe it was tied. I don't know. But there are some interesting aspects of TRW here. Not a name we talk about quite a bit. A fun one to bring up. We'll have to watch this trade over the next few months. This is all April, so we got some time on this one. But interesting. We'll put it in our to follow up with file, and we'll review it down in April and see how this guy's trade played out. All right, that is going to do it for the old odd block, and now we're going to roll right into our listener mailbag.
Listener mail. Listeners write in.
Mail's in.
All right, and that theme means it's time to break open the dusty and musty old mailbag and pull out some of the questions that so many of you have been waiting so patiently for us to get to here on the show. And today's question comes from our forum over at theoptionsinsider.com and is posted by someone that goes by the handle Mishal. And he writes about U.S. index options. He says, I am looking to short strangles on either the Dow Jones Industrial Index or the S&P 500. I'm not from the U.S., so not really familiar with the options industry here, and having trouble selecting the right options to trade. I've looked at the websites of SIBO and CME to try to figure out the right options, but the number of different contracts available has left me totally confused. Can someone guide me as to which is the right contract to trade if I want to take monthly positions by selling out of the money strangles? Also, is it better to trade the Dow or the S&P 500? Thank you. And this, of course, is, we'll just dive right into it then for this question. He asks about SIBO and CME, so he's talking about the big SPX and the CME big futures contracts there. But it sounds like, given the fact that he's not particularly familiar with the U.S. options industry and the products that are here, those might be a little bit much for him to bite off if he's coming in for the first time and shorting strangles. I would probably recommend this guy take a look at the SPY options. They're smaller, they're more nimble, they can be more liquid in some of those out-of-the-money strikes, so you can get in and out a little easier. The spreads are tighter, and so he can put on things a little easier, I think, in this spread, regardless of the validity of selling out of the money strangles in this low vol environment. I'm not sure if that's something you want to pursue, but we can leave that.
Sit here and tell some new guy to go sell strangles in the S&P 500.
Hey, he's asking.
Just for everybody scoring at home, we are not condoning that Mishai go out.
Definitely
and
not.
Start loading the boat. Okay. No at 617 VIX. No.
Yeah.
Yeah, so that might be the first starting point. Second starting point, though, regardless of what your strategy would be in the broad indices, I would definitely recommend SPY as probably your starting point. Would you guys agree with that?
I think that,
I would say,
yeah.
It's a good starter kit.
Yeah, SPY, DIA, QQQ.
Yep. Stick with the ETF ones, are a little easier.
Yeah, expiration is a little bit, better easier to understand on those, compared to the DJX, RUT, SPX, NDX.
Yep, they're much simpler products. Also, instead of going out there thinking strangles, think maybe call spreads and put spreads to start with. Like that trade ends up being called a condor, or actually it's called an iron. What do we call it? An iron condor. So, and also, acquaint yourself with some volatility too. I mean, this is not probably, although I don't think it's a great place to sell a lot of volatility, maybe little tiny bits, but certainly not. It's a tougher starting point, and it would have to be a very short-term type of trade.
Yeah, maybe. Oh, go ahead, Tim.
Sorry, I was going to say, if you want to sort of, see what Mark is talking about, try it in a virtual account. Options Express has a virtual account.
Absolutely.
You'll see what happens.
Trade the thing first so you can see how these options move. Take some free classes. Options Express, you guys have all that great stuff there. I mean, you take advantage when you open one of these accounts of all the stuff that's available to you. I mean, I think that's probably the first thing. People don't realize how much stuff is actually on one of those platforms now.
Tim Navabi, the great proponent of paper trading. But once again, I agree with you. This is definitely a case where if you're not familiar with the products and how they trade, you definitely want to try your strategies in an account where it's not going to break the bank for you first.
Paper trade until you lose, so you know how it feels with paper money.
There you go. Paper trade until you get the paper cut. Then
there you go.
Yes, exactly. My rule generally trading, if you don't know how an option is going to perform before you enter, you should not enter. If you buy it and then go, what's this going to do? That's too late. After purchase or sale is too late to understand how the option is going to work. You need to understand prior to transaction. I think that's a key thing for anybody when they're trading anything.
Yes, know how the product performs. Probably number
Before
one.
Before
you do it, you don't want to learn. Don't want to use your money to learn. That's the wrong way to go.
No, Options Express has plenty of paper money to use. Free money.
Burn up Tim Navabi's paper money. Don't use your own.
Exactly.
Tim's got more where that came from.
Burn that paper account up. But
and I like your idea too, Andrew, about obviously this is not exactly a favorable environment for writing tons of OTM strangles. I think maybe migrating that a little bit, picking up some ATM liquidity, and then if you are going to write the strangles, offset it with the ATM, make a nice little condor out of it or something like that. So you can play that way, and probably a little bit better way for this environment to position than just coming in and hitting the bids on all these OTM calls and puts.
Yeah, and just kind of waiting, so it's. I mean, there's lots of things this guy needs to. I mean, there's obviously we teach people. We spend a year teaching people how to trade options. So, I mean, at least start to educate yourself. You can open up like Options Express. Great, they have great education, run by my man Jim Ruzan. Take what's available by opening an account, and you can learn tons for very, very small dollars. Like open an account, you can learn a lot right away, and that's how I would position something like that.
And I would say, use a service, use a option pit, for example, look, like some of your mentoring and some of the free webinars that you have, in that, we get phone calls sometimes from individuals saying, I'm not sure what this is. I don't know what it is. Why don't you talk to me about it? Now we've got calls in the queue and, so, I would say use a lot of use a mentoring service like Mark's and Andrew's. I apologize, Andrew.
No, don't worry about it. That's who, when Mark is busy, that's who they're going to end up talking to anyway when he's,
Yeah.
All right. Thank you for your question, Michal. If you want to follow in Michal's footsteps, then by all means, surf on over to theoptionsinsider.com/forum and post your question in the questions or listener questions, for options for the option block, and we'll get to it there. You can also send them to us via Twitter, twitter.com/options, or via Facebook or via our voicemail, any of the other numerous ways you can get in touch with us. And now we're going to dive right into Around the Block.
Around the Block.
And welcome to Around the Block. This is, of course, the portion of the show where we discuss what's coming up on our own personal trading screens, what we're watching for the next few sessions. And we're going to kick things off with the man from the mountains, a.k.a. the snowmobiler extraordinaire, good old Uncle Mike. What are you watching in your screens when you're not busy rolling your upside in Apple and silver?
Well, I mean, what I'm definitely taking a look at right now, it's funny you mentioned silver. We're getting close to some moving averages on silver, and so I think it'll be interesting to see if they can break through them. So it's kind of like in a lot of areas, not necessarily like the VIX, but in the upside, if we can break through a few things in both silver and gold for that matter, I think we could see more upside ahead in the near term. We're at one of those points right now to where we'll just have to wait and see.
Mike, I'm so tired of your endlessly bullish, optimistic, rosy outlook on life, sir. It's so depressing.
And then everything's going to go bankrupt and we're all going to die.
That's better. I feel much better now. All right. Thank you for that, sir. All right. And what else is everyone watching here in the old Around the Block? Of course, earnings season is kind of coming to a slow crawl here. We still have some names coming out, but not exactly the flurry we had a few weeks ago. I talked jokingly on the last show about good old Radian, ticker symbol RDN, coming up on the old horizon. They actually had earnings this morning, and looks like they were pretty much about net unched, a little bit down on the day. So this name actually back up close to the $4 range. So this stock has just run off to the races since we jokingly talked about it at the end of the year. It was $10 at the beginning of the year last year, and everyone was buying upside. It's since plummeted down to about $2 and was trading south of $2 for a while there back in when we jokingly referred to it on our end of the year wrap-up show in December, and now it's back up doubling in price roughly to around $4. So a lot of action in good old RDN these days. Perhaps I shouldn't jokingly refer to it that much anymore. There's a lot of action here for someone looking for some vol and some direction in good old, for an option trader in particular. So what else are you guys watching on your screens these days? Andrew, I see you're intrigued by good old CRM. Are you playing in that one as well?
Yeah, actually, we had a lot of Option Pit Live people today. Our daily our daily live webinar. We were looking at CRM. Actually, we all came to the conclusion, or at least I did anyway, that they had priced that. I think there was a funky quirk, and I thought they priced that at the money straddle very cheap. So we were basically looking for ways to buy that the February leap, because it's really strange. There's only 2 days for it to live. And sell some of the ordinary March against it.
The Feb weekly, you mean? You said Feb
exactly.
Feb,
I'm sorry, the
leap,
Feb,
and you threw me off. I was like, wow.
Feb that's really cheap since it's expired last week. And actually, we found a lot of really nice plays that cost you almost nothing to enter. Assuming the volatility compression, you make really great money up to around 145, 147. And then actually that's what happened. So I think, I'm just getting a couple of Skypes from some people saying, woohoo, so it was a nice, those are nice trades.
Always nice when you get the woohoo Skypes from the clients, because that means you're doing something good.
Well, exactly. And the cost of entry was almost nothing for these. It's just one of those times where there was enough juice in March in the back month versus the gamma you had to pay for, and you can get away with, a slight ratio that made the whole cost of the thing almost nothing. So even if there was no action, the downside risk would have been, just minimal.
Yeah.
So it worked out.
I see that a lot. And it's good that, Andrew can find those and point those out, and even get some people, trading them. And that's something that, I don't see that much of here. We still have people, wanting to do credit spreads, and it's saying it works both ways. In that you can probably find, like right now in this type of environment, you can find some relatively, good opportunities that really aren't going to cost too much.
Indeed.
Exactly. That was, and and most, like a lot of people, because generally we have kind of techniques around earnings. I try to take my small a delta position as possible, but just sort of, just strictly risk reward ratio on them. And if there's some decent pricing in some of these things. So, and that's generally when we end up with a trade that looks worth doing or not. And a lot of people just like, hey, I think this thing's going up. What's the best way to play it where I don't get crushed by the vol? So we have a lot of those conversations too with people. So they're all, and we can certainly structure that stuff easy enough.
See, listeners, that's what you want. You want someone who's glued to his screens when he's not eating delicious Maine lobster to find you
Yes.
these pricing discrepancies and these vol discrepancies that you can take advantage of for your own trading when you're not busy living your own life. So that's what guys like Mark and Andrew are handy for. They'll be there 2 a.m, glary-eyed, glued to their screens, finding the discrepancies so you don't have to. So you can remain.
Wow, that's an awesome pitch.
You can
Mark.
remain showered and healthy and functional in your daily lives.
Yes.
Mark
Andrew might not be though.
Yes. Well, that's the price. That's the cross you bear for society, Andrew.
Yes.
All right.
Next Wednesday looks like we have some news. Looks like GDP, the Beige Book, Chicago PMI. Before that on the 28th, consumer confidence. 27th looks like home sales. So. You're asking what we're kind of looking at. Yeah, numbers are coming back on the horizon again. At post-earnings, post-Greece. Well, maybe not post-Greece, but almost post-Greece, perhaps. We'll see. And then post-downgrade, post all these other macro factors that were driving the ship for so long. Finally, these other smaller macro factors, I suppose you can call them, are finally starting to come into focus a little bit more. Because, hell, things are good in Germany, and that's driving up Brent, so what else do you need to know?
It's crazy. The big Greek road trip. I love that. Doesn't everybody feel like the market's kind of, I liken this kind of to, when the Soviet Union collapsed, the CIA didn't have the commie bogeyman anymore. And I think that's kind of where our market is right now. You don't have Europe collapsing and you don't have the banks collapsing. Well, at least we don't think so. So I think we kind of, that 10% rally sort of was made up for last year not doing anything. And now we're looking at everybody staring at each other. Do we go higher? I don't know. Do we go higher? Do we go higher? I can't tell if we go lower, but I don't think we go higher. There's not any. Everybody had something to lean on before to buy as a reason to buy, and right now it's very hard for that. It's very hard for that thing to lean on to buy. I mean, it was easier if they solved the crisis. You can be a buyer of just about anything. And now everybody's, oh, man, now I got to look at fundamentals, and I got to look at returns, and, okay, is the price of oil going up? So I just think it's like post-traumatic stress syndrome or something where everybody's looking at. That's why I think, obviously that's part of the volatility thesis is coming in a little bit where we sort of revalue it here going forward. But I think that's a big part of what's going on. And who are the guys that have been right? All the guys have been sneaky long the whole time, So yeah. It's just harder for now who's going to be jumping in, right? All the people that were just bailing last year.
And I agree with you, but you also got to notice too that when the market does get weak intraday and things don't look good, it just holds firm and comes right back. And I think that's really what kind of amazes me is when it does look really weak and you think, okay, here we go, we're fall off here, and nope.
Exactly,
I mean,
I agree.
It's done that for the last
day.
2 weeks, 3 weeks, yeah.
All the buyers step in like, woohoo! It's almost like they start buying Apple first. Oh, it's down today. Let's buy it because it'll be cheaper than it was last night. And then okay, Apple goes up, then the NDX starts to tick up. And then the NDX is going up. Let's go buy some of this. It's crazy, yeah. But you're right. It is amazing how there's just it seems like the way to screw up is screw up by being long right now. If you're gonna make a mistake, it feels like it's some of the bigger stuff. I'm a lot more comfortable doing that than from the other direction. I would say up to 2 months ago, I would not have said that at all. I was trying to figure out what way do you blow it when you're trading. I think it's okay to blow it on the long side right now. To some degree, tomorrow could be another thing, but it sort of feels like that's how it feels right now.
But you also have a real good opportunity now to buy some really cheap puts.
Exactly. I was just about to say the same thing.
You can be long, and you can go buy some insurance and, not spend too much money and be happy.
Cheap time to hedge your bets. Come on in. If you want to dive into the underlying maelstrom, then by all means, it is a cheap time to pick up some downside and just to hedge your bets. And then you could have the best of all those worlds like the boys at KYO like to do all the time. Perhaps
seems to work for them.
Yeah, it's been working out all right these days. In fact, the put end of the spectrum has been the downside for them. They have to keep rolling those things and wasting money on all this protection. What is that? Who needs downside protection in this environment, particularly when you're trading Apple? When's the last time one of those puts actually came into play? I don't know. Been a while. But yes, I think with that talk of boogeymen and getting sneaky long in the market, we're going to close out this Around the Block segment. We're also going to close out this episode of the Option Block. I, of course, want to thank all of my cohorts, my partners in crime here on the old All-Star panel for joining me today. And starting off with you, Uncle Mike, what is coming up over in the land of KYO that may interest, intrigue, and or titillate our listeners?
Well, there'll be lots of titillating going on this Monday night.
I like it.
We have a webinar on the Options Express platform on butterflies, both broken winged and fixed, and I'm excited about it. This is one of my favorite webinars. It always gets a lot of interesting discussions going, and if you're available Monday night, then stop on by, go to the Options Express Education tab to find out more information on it, and if you're not available, cancel all appointments and become available.
There you go. Uncle Mike time is appointment viewing. You definitely want to clear your schedule to see what Uncle Mike and the boys at KYO have in store for you, because I think titillating may indeed be the understatement of the century when it comes to KYO. All right, thank you for that, Uncle Mike. Now go forth and snowmobile, sir. And Tim, what do you have coming up over in the land of OX that may also titillate our listening audience?
We have a new live event. It's up on our site. It's on March 24th. It's in Phoenix. So we're moving around the country here.
Phoenix, very titillating. Yeah. A little bit more so perhaps in this time of year than Minneapolis.
Yeah, that's on March 24th from 8 o'clock in the morning to 3 p.m.
You had me with the titillation until you said 8 o'clock in the morning.
Sorry.
I don't know if the titillation can start till like 11:30 or so. All right, and Andrew, same question for you. Titillate our listeners, sir, with some fascinating tidbit or upcoming event.
Titillating the listeners. How can I titillate them? Let's see. Well, we have Mark is giving a VIX talk next month. We are still running our free webinars once a month. Actually, the last one was on evaluating volatility prior to earnings, which has been very timely for a lot of our subscribers. We actually got a huge draw on that as well. So that's those are basically the two big things. Obviously, we started our gold course, which has been well received, and we are still moving along and growing as fast as we can keep up with it. So that's all been very good, and of course, we continue to focus on the volatility products because we believe there's still a lot of edge in those things, a lot of moving parts. And a lot of our clients, they like trading them because one good thing about them is they can't go down forever and they can't go up forever. So it makes for some interesting trade in how you trade the options.
All right. And with that, we're going to close out this episode of The Option Block. Of course, I want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And if you'd like to follow in the footsteps of any of our listeners who have been contributing to the show and sending in their questions, or if you'd like to find out more about any of the unusual activity we've discussed on the show, there's quite a bit more we don't have time to get to, or the options news or information or analysis or any of Mark's or Andrew's articles that pop up on our site as well, then by all means surf on over to theoptionsinsider.com and check out all of the fun information we have over there, including our ever-expanding Options Insider Radio Network. We have some new shows coming up in the very near term that I think our listeners will find fascinating and perhaps even, dare I say it, titillating. All right, and with that, we want to thank all of you out there for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.